Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, we're going to be focusing on high dividend yield ETFs, and I'm going to be sharing with you guys one of the easiest ways to increase your dividend income if you guys are kind of looking for an early retirement or you're kind of moving towards wanting to earn some more higher dividend yields. So in today's video, I got two ETFs I'm going to be showing you guys. I got one that's based out of Canada because I'm Canadian and I focus on Canadian content on this channel, but I also got an American ETF that we're going to be focusing on as well. And these are going to be covered call ETFs. So these ETFs prioritize call options, which means that they're focused on dividend yield and increasing income. So they're not so much a growth-based ETF like I traditionally do on this channel. They're more of an interesting type of ETF that are fairly actually new. They haven't been around for a long time, but their main focus once again is increasing those dividend yields. And you're going to see that these are some of the highest dividend yield ETFs that are going to get you the most dividend income on a monthly basis. And the main focus of these ETFs, once again, is the high dividend yield. Now, I'm going to kind of try to hammer this into you guys throughout this video because I think it's really important to understand the pros and the cons of using covered calls to increase your dividend income. There are definitely some risks and some cons with the approach, but the main pro is the fact that you actually get to increase that dividend yield. And if you are somebody who wants to retire or you're looking to get more income right now, not in a couple years from now, but you're looking on getting income right now, then these funds definitely will give you that option. And before we get into the video, just really quickly guys, if you guys do enjoy this video and you guys want to see more dividend based and passive income content on this channel, be sure to subscribe, and if you guys do enjoy this video, smash the like button. It really helps the channel out. Alright guys, so the first ETF we're going to be talking about is going to be ZWC. That's the ticker is ZWC, and this is the BMO Canadian High Dividend Yield Covered Call ETF. And this trades for $19.50 on the TSX. And we have the actual fact sheet over here on the BMO website, so we can download the fact sheet. We can actually take a peek at some of the holdings, and we'll discuss the yield and kind of take a peek at this fund a little bit. So taking a peek here, we can definitely see that this fund is definitely focused on the monthly income distribution field. We can see the yield for the fund is a 6.33%, so you would expect a 6.33% yield, once again paid on a monthly basis. And you guys can see that the growth for this fund is pretty flatline. Like I mentioned earlier, for a lot of these funds, we see pretty, I wouldn't say they trade sideways, but they kind of do, with a little bit of growth coming over the next year, and a lot of this coming from some of the Canadian stocks. So once again, it's kind of interesting. If you would have invested in the fund way back at the beginning of 2020, you would have done pretty well. But historically, these funds have kind of traded with a tiny bit of growth maybe for this one. But once again, it's mostly focused on selling those covered calls and getting that dividend yield up. And if we look at the holdings for the fund, we can see that a lot of it is pretty solid companies. So that's always a good thing. We have 40% in finances, 13% in energy, some communication services, and the top holdings are Bank of Nova Scotia, TD, Bell, Royal Canada, Royal Bank of Canada, CIBC, Enbridge, CNR, and then Manulife, and some other ones here at the bottom. So pretty decent holdings overall, pretty decent fund. But once again, remember, you're sacrificing long-term growth a lot of the time to get that higher yield. So if you're looking for a nice good yield right now to earn more passive income, you might want to take a peek at this fund. And the second fund we're going to be talking about is Global X NASDAQ 100 Covered Call ETF. This is a covered call ETF, and this is the US fund that we're going to discuss today. And this is the ticker QYLD, very popular high dividend yield fund. You're going to see this is a very, very high dividend yield fund, currently trading at $20.59 USD. If we go over to the fact sheet here on the website, we can see some different things about this this ETF. So you can see the companies are pretty good quality companies. We have Apple, Microsoft, Amazon, Google, Tesla. So it's almost like an S&P 500 kind of base, but instead of giving us the stocks and the growth and that dividend growth, we're focusing on high dividend yield. And the main thing you want to pay attention with a fund like this, since we're looking for high yield funds, you want to pay attention to the actual yield here. So if we look over the 12-month trailing yield is 14%, which is pretty crazy, and the distribution yield is at 12.94%. That's almost a 13% distribution. So they're giving out a pretty good distribution yield. So you know, you could definitely kick up your passive income with this dividend ETF. But once again, you got to keep in mind that if you look at the growth of the stock, we're really not getting a lot of growth with this fund. We're just focusing on yield. So you always got to kind of keep that in mind. So if you guys are going to go with the covered call ETF approach, I would definitely say focus on ETFs. I know a lot of people try to do this themselves, but I definitely like the idea of following some of these funds because number one, it's super simple to do. They have a team of people who who are special, who their specialty is managing these funds. So if you're going to go with the covered call strategy, picking these ETFs is one of the simplest way to do it, because all you have to do is buy the ETF and then they do everything for you. So that's definitely my advice, and this is the reason why, once again, even when it comes to just buying regular stocks, I'm a big fan of ETF based investing. Let's do a quick little comparison to see how much income you can actually generate using these funds as of today. So if you're looking for passive income today, these funds might be able to give you opportunities to make more income from dividend stocks. So let's take a starting amount of about $100,000 so we can kind of see full picture how much these funds can actually make us. So we'll go 1,000, 10,000, 100,000 here. And we're going to go after the course of, let's say, like 5 years or so. And our return rate is going to be our dividend yield. And we're going to focus just on that because that's kind of what these funds really focus on. So we're going to start with the ZWC first, since it's a lower yield fund. We have a dividend yield of about 6.33%. So we're going to punch that in there. This is going to compound annually. And our additional contribution is going to be 0 because of the fact that we're going to kind of try to brainstorm to see, like, let's say if we have money right now and we're looking to retire right now. So we're probably not going to be putting money in. We might not, but we're not going to do any additional contributions because we're probably going to be living off that income to some degree. So let's calculate this and let's see how much money this is going to grow to be. So in the first year, you can expect about $6,330 in dividends. Second year, we can see this money just kind of compounding, growing if we didn't put any extra money back inside the portfolio. So you guys can see, like, even in the first year, $6,000 is quite a bit of dividend income. And if you put our calculator to see how much that would be in terms of monthly income, we could go 6,330 and divide that by 12 to give us, there's 12 months in a year to give us the monthly dividend income, and we have $527 per month with the ZWC. So for every 100K that you invested in ZWC right now, you would get about $500 per month, which is pretty powerful stuff when it comes to dividend income. That's a pretty high yield. Next, we're going to switch things around and pretend as if we were investing into QYLD, which is a high yield, higher dividend yield fund. And we have a dividend yield of about 12.94%. So I'm going to punch that in there, 12.94%. And again, this calculator does assume that we're not withdrawing the dividends. We're just kind of keeping them inside the portfolio. So obviously, as the years go on, it's going to kind of calculate that. But if you wanted to just see kind of how much we would make on a yearly basis, we would just pay attention to the first year. So I'm going to calculate this, and we can see here from QYLD in our first year, just with the dividend yield alone of $100,000, we'd be making about $12,940, which is actually pretty crazy for a yield that high. Now keep in mind, these funds are a little bit, they still haven't tested the test of time. And we've seen with some of these funds that the growth has been kind of decreasing. QYLD a little bit more because of the higher yield. The question is this sustainable for the long term? And that's something you're going to have to ask yourself. But if you want income right now, these funds will definitely give it to you. As you guys can see, we take 12,940 and divide it by 12, and that gives us a monthly income of $1,078. So for every 100K invested into QYLD, we could make $1,000 a month, which is pretty attractive. So if you're looking at a full-time income, you would need about, I don't know, maybe $300,000 to $400,000 with QYLD to hit that full-time income per month. When it comes to picking a portfolio for retirement, obviously there's a lot of different things to consider, and you might want to have a portfolio that's kind of has a bunch of different things in it. You might want to focus on some growth stocks inside the portfolio. You might want to focus on some dividend stocks, and then maybe you want to have some higher dividend yield ETFs. You might want to have a mix of things. But when it comes to retirement, you definitely do want that income on a monthly basis. You can't invest in the S&P 500 and then have a crap year with the S&P 500 and then not being able to withdraw your funds. So this is why when it comes to retirement and thinking about retirement and whatnot, and if you're going to take an approach in life where you're not working as much, you do need to focus on yields to some degree, and you do need to have a regular cash flow of money coming in, because on a monthly basis you're going to have to pay for your bills, you're going to have to pay for your mortgage, you're going to have to pay for all these things, and you're going to need to have income coming in. So when it comes to retirement and kind of picking an early retirement or retiring at a younger age, you're going to need some passive income of some kind. So this is why these funds are pretty popular amongst people. And once again, like I mentioned earlier in this video, you don't need to go 100% hardcore with these funds. But if you are looking to just kind of get that dividend yield up a little bit inside your portfolio, or just earn just a little bit more income, they're definitely a good way to do it. And if there's anything you take away from this video, if there's one thing that you learn from watching this video, it's that high dividend yield covered call ETFs, although they provide income for now, they do sacrifice growth to get that yield. So if you're more of a traditional investor like myself and you're looking for growth plus dividend yield, plus you want that money to grow and compound over time, then one of the best ways to do that is to buy a good dividend growth based ETF, or buy some good quality dividend stocks, or even buy something like the S&P 500, because you're getting that compound growth, and the stocks do have pretty good returns in the long run. Now, if you're looking for income right now and you don't want to wait, then these high dividend yield covered call ETFs are definitely a way to do it. But keep in mind, you can be sacrificing some growth, and if you're using that dividend income to basically spend on yourself right now in retirement, you're also going to be sacrificing that growth, in which you could be reinvesting those funds as well. So it's always something to consider, but that's the big takeaway from this video. Anyways, guys, I hope you guys enjoyed this video. Let me know what you guys think in the comments. If you guys did enjoy it, be sure to smash the like button and subscribe to the channel if you guys want to see more dividend-based investing content.